What's going on, YouTube? In this video, we're going to talk about Taiwan Semiconductors, ticker symbol TSM. Year to date, this company is up 23.7% over the course of 1 year, 49.5%. So Taiwan Semiconductors just reported their Q3 earnings last week, and they were pretty good. They beat on top and bottom line, and also gave out some pretty decent guidance. And on their earnings call, one of the more important things, I believe, was not just the forward guidance, but also what are they doing with their 3 new manufacturing plants that they're building? So they got one being built in Germany. They're planning on producing 22 and 28 nanometers and potentially some 12 and 16 nanometers as well. But I believe they're mostly focused on 22 and 28 for Germany. And then the 12 and 16s here, they're going to be focusing on using those in Japan. So it looks like Japan and Germany are going to be producing more like industrial and automotive type nanometer chips for going forward. So I think what they're doing is they're going to distribute these more simpler chips to these new plants, because making these chips is a very difficult process and it takes skilled workers to do so, which is why Arizona plant is getting postponed by a full year, which we can see right here. It was going to be up and running in 2024, but because of the lack of skilled workers, they are now pushing it out about a year. So I think they're going to be able to turn Japan and Germany over pretty quickly to where they'll start pushing off the easy chips. So they'll be able to focus more brain power, more manpower on these new chips, these 2 and 3 nanometer chips, so they can continue to innovate and stay ahead of the competition, which I think is a pretty good idea. So they've got these 2 different plants who take care of the easy stuff, basically, so that way they can focus on the future and more difficult processes. So same thing with Arizona, but Arizona is going to be producing more advanced chips. They're going to be doing the nanometer fours. So, and then probably eventually might jump into the threes and twos, but currently that's what they're focusing on in Arizona, is going to be the nano chip fours. I think that's pretty important. I think that's a pretty strategic way of doing it, is to still make money off these less advanced chips, open up plants, get more workers in there, keep on growing the revenues and everything else. So I'm pretty excited about that. I think that's a pretty good idea. That way the main hub can focus on growing their innovations. So over here at the financials on TSM, and as we go through these financials, all of these numbers are going to be in Taiwanese dollars, not in USD. We won't pay too much attention to the actual dollar amounts on this particular one. So we have top line, bottom line. We have revenue, gross profit, net income here. All three starting to trend lower. We know that inventories across companies are increasing. You can also see inventories over here are actually up a bit. So we know that inventories on other companies, they're trying to work through their current inventories before they're going to start buying more chips. They've said that before in their earnings reports. That is the reason why revenue and gross profit are down. But I think the reason why net income is down a bit more is because of their SG&A, and that has a lot to do with the couple thousand employees they have hired on to run these next 3 up and coming plants. So probably going to see a slight decline in net income going forward for a little while until those plants are up and running. Then we might start to see that net income start to trend back up higher. So because of that, we're probably going to see a decrease in net margins in the meantime. And but I do believe that'll come back and then some, potentially, with these next 3 plants once they get up and going. Gross margins doing pretty good, 58.6%. We have a revenue, gross profit year over year, no current growth at the moment. Obviously, we can see that up here, but future growth is still looking pretty decent. Return on invested capital sitting at 21.8%, doing pretty good on return on invested capital. Or PE ratio currently sitting at 16.3, kind of near historic lows. Not quite, a little ways away from it right now, but not that far. Still seems like a cheap PE to me. Cash to short-term debt, we've got plenty of cash to cover our short-term debt, and we've almost got plenty of cash to cover our total liabilities, which kind of tells you that the balance sheet on Taiwan Semiconductors is probably pretty good. Net income to free cash flow, we have a lot of net income, and our free cash flow, not a lot of free cash flow anymore, but that has a lot to do with our capital expenditures, because we are buying and building more plants. They're working on advancing to the nanometer 2. So there's going to be a lot of CapEx in the short term, I believe, for this company. So we're probably going to see a pretty significant decrease in our cash flows, which we've already seen. And then on top of it, if our net income starts to decline as well, that's going to impact our free cash flows too. So we might see quite a significant decline in free cash flows in the meantime, which maybe investors might see past that or see that and think, oh no, Taiwan Semiconductors is going to turn into an Intel or something like that. And then maybe the stock will sell off. Maybe we'll have a fantastic buying opportunity on our hands in the future. But we'll see. So share count dilution, they haven't done a thing to the share count. Dividends, they do increase their dividends over time. So pretty good. So we have three other companies to compare to with TSM. And on TSM here, we have our operating cash flow is more than our net income by, about $19 billion. So that could be something worth looking into to figure out why our operating cash flow is higher, so much higher than our net income. But it's probably got a lot to do with amortization and depreciation, because we do know it's not stock-based compensation, because they're not really handing out hardly any stock-based compensation. So because the change in currencies, these first two charts are in two different currencies. That's why TSM looks like it's doing way better than the competition. So we'll come over here to the growth rate. We can see TSM's got EPS growth rate of all 8, revenue growth rate 12, competition kind of in line. Intel, they're expecting 43% EPS growth rate on Intel. Gross margins here. So TSM, not the best on gross margins, but definitely the best on operating margin and profit margin. But actually not really. They're right in line with the competition. So TSM has about the equal amount of margins as the competition, except for Intel. Free cash flow, again, this is in different currency, so we all have to disregard that, but they are still a good free cash flow positive company. Not the best return on invested capital at TSM. PE, though, we can see TSM is the cheapest of the bunch here in terms of PE, so could be undervalued based on the competition for sure. Peer lunch valuation gives TSM a fair value of $45.40. That has a lot to do with the lack of growth at the company right now. Multiples comparison, we've got those three other companies we're compared to, and we're gonna have to get rid of Intel because it is not profitable. So that gives us a price per share of $119.20. Our manual PE, we take our market cap minus cash, add in debt, divided by cash from operations, gives us 10 years before we earn our current market cap. So that's telling us we are very undervalued. Price to book, 5-year average 6.23, currently at 3.1. PEG ratio sitting at 1.44 today, forward looking 1.32. So that's telling us we are also close to undervalued. Grams valuation gives them a price tag of $116.68. And our dividend discount model gives them a price tag of $99.78. Our DCF valuation here, analysts have growth rate of 24%. Historically, they're at 18%. I'm at in the middle roughly at 20% for free cash flow growth rate. That gives us a DCF price per share of $162.64. Rule 72, we got three different sources for EPS growth rate. Not looking like too much growth at the company for at least a little while. Only sitting at about for an average of 9% growth rate. So because of the lack of growth at the company, it's going to show up as a pretty low fair value on Rule 72 of only $59.50. Now at our final summary here, TSM currently trading at $91.64. We get a fair market value of $100.53, 30% margin of safety of 70, analyst price target of $125 per share. Now, the big thing on this company was the growth. The two calculators that focus a lot on growth is P Lynch valuation and Rule 72. And those two you can see because of the lack of growth currently, that's what's bringing down our fair market value so much. So we come over to here. We have valued TSM before. We did the TSM about 2 months ago, roughly. And we can see prior we had a fair value of $127 per share. And because of the lack of growth, like I was just explaining, is we can see across the board where our valuations were before. So Benjamin Graham valuation down slightly, our DCF actually up slightly. Multiples value slightly down, but almost flat. Rule 72, this is where it really took a toll on the fair market value, was Rule 72, went from 147, probably because of that higher growth at that point in time because of the AI hype. Now that analysts have a more understanding of what AI might do, before they probably thought, oh, this thing's going to grow like 20-30%, something like that. And that's why analysts had predicted these different price targets, and that's why our EPS growth was going to be a lot higher than what it is today. And because they're like, now they got a better grasp of how it's actually probably going to play out, that pulls back on the overall growth. which is why our Rule 72 and Peter Lynch valuation is actually kind of cut in half across the board there. So that explains that. And so because of that, that gives us a lower fair value today than where it was a couple months ago. So at the stock chart here, we can see TSM locked in this macro uptrend right now. Once earnings hit a few days ago, last week, earnings were pretty good, and it looked like TSM was going to start to run back up higher. It had good forecasts and everything, so we'll have to wait and see what happens with TSM overall, but looking like it might hang out here and maybe come back up, retest the top end of this channel based on technicals, or at least come back up to about $103, $104 per share, which would be about fair market value. So we'll have to wait and see what happens with TSM, but that's what it's looking like, what it's setting up as. We are making higher highs and higher lows, and actually just barely made a higher low here. But we'll have to see if this thing breaks through this line. Yeah, all bets are off, and this thing might come back down to maybe $72-ish per share, which would be our 30% margin of safety buy range. So we'll have to wait and see what happens with TSM, but earnings were pretty decent. I think this thing's going to move back up to about $103 per share in the shorter term, but we'll have to reassess where things are at next earnings report. But that is it for TSM. If you found value in this video, drop a like, subscribe, comment. We'll be back later with another stock analysis video.